In this video, guys, let's talk about trading the close. Any edge? Stay tuned. Hey traders, warm welcome to you. All right, so the open gets way more love than the close, right? Everyone talks about trading the open, trading the open, trading the open, range of breakout strategy, opens form the high, the low, all this stuff, the open, the open, the open. The poor close gets no love. It gets no love. Everyone's tired, no one wants to trade it. Is there any edge there? I think there is. Now, I don't think there's as much edge potentially as the open, but there is still some things to look out for. And I think it's worth you, if you're a day trader anyway, going back and looking at the close and saying, hey, are there a few specific strategies I could use and deploy in the close? Maybe there's not as many, maybe it's only one, maybe it's a handful, but there's some opportunity there. Why? Because you have this time cutoff. Ding, the bell is going to go. Yes, you can trade the futures after that. Yes, there's some post-market trade in some of the stocks. But the point is, options are closed. Liquidity dries up massively in both the futures markets and the stock you're trading. And so it really is, if you're going to get stuff done, you probably need to get it done quickly before the close. And many like big traders and hedge funds won't even get involved after the market because the liquidity is so low. So what could we have? You're going to have to use a very, very strict filtering criteria. And so filtering criteria is, hey, if I'm going to take this, this has got to happen, this has got to set up, this has got to set up, this has got to set up. One thing to look for is a reversal. So what I mean by a reversal, you know what I mean by reversal? Technically, we're saying, okay, the market has pushed on too far, it's stretched, and this is not generally a trend day, because a trend day is more like it's grinding, it's pushing, it's pulling back, it's doing another leg. We'll talk about that in a moment. A reversal is more like, hey, we've done a lot very quickly, we're struggling to break two highs, and actually everyone's kind of looked around and gone, there's no more buyers here, let's have some move back the other way. And obviously your filter process for that is going to be, okay, some extended move that really hasn't gone any further, maybe has faked out in the last kind of 90 minutes or so, then reversed, started to break through a support level, and you ride that back down to the lows. These are unusual, but they can happen, especially when the daily chart is in your favor. So if let's say you're in an uptrend, the market's kind of pushed lower in the morning, uptrend on the daily chart, should I say, market's pushed lower in the morning, consolidates a little bit, tried for one more push, and then you get a very aggressive buying coming in. That's like, okay, we're in line with the daily, the intraday trend was down, we're down X amount across the board on the NASDAQ, on the Russell, on the Dow, on the SPOO, and this is like, oh, okay, we're going to reversal back up. So you've got to be very clear about how you define that, but that can be very fruitful in the final hour of the trading day just because of that urgency, because a lot of people are caught out. You know, and that is, and something as well is, if you've got a catalyst type thing, I can maybe just draw it on here for you. You know, if you've had this kind of big move after a catalyst, and then we've got an hour, you know, very often if it's pumping down to the lows and people just getting out, often a little trade through that low is quite a nice little scalp trade. Again, do your own homework and research it yourself. It's not a recommendation, of course, but that's often quite nice because of a big change in sentiment. So that reversal trade, super unusual, but can offer opportunity in that final hour. And by the way, close, let's say the last 60 minutes of the day, maybe 90, but I'm going to call it 60 minutes. Gosh, that's just a 6. You can see that. I'm stretching, trying to do it. Trend continuation. This is probably a better one. One happens more often. We're not going to be trend days, but on the trend day, when you've got that grinding trend, it's just chugging. Very often over lunchtime, it sits. Maybe it kind of tries to roll, and then we get a final kind of flurry into the close. That's a nice one if you can get the right area and filtering criteria and everything lined up. It can be very, very good to get on. Now, why? Because people, you know, there's already a bias. Imagine that's the VWAP here. You know, there's already a big extension. It's not a mean reversion day. It's an exploratory new price discovery mode. Maybe there's a catalyst, maybe there's not. You know, these type of days, they just keep chugging. That goes very quiet because there's no sellers. It's a supply demand just sits there and maybe comes in a little bit, and then what happens is people are thinking, hey, it's going to come low, it's going to come low, going to get a better price, better price, better price. They don't, and then it rips back up, and then they have to buy higher, buy higher, buy higher. You've got short covering, etc., etc. So those trend continuations can be quite good, and they're quite aggressive to the downside when you have that downside pressure. Maybe it's in a bear market, or maybe it's a negative catalyst, and you get that, we've got to get out quick before the close, before the close, before the close, especially on a Friday, something like that. Final one, discussed this one before, guys, pretty simple. You have your VWAP. If the market's been oscillating around the VWAP, sometimes it acts as a magnet into the close, and very often a little extension away from that VWAP in the last hour stalls, wants to come back to the VWAP. There's algos are fighting, VWAP is considered the benchmark, and so that very often just sucks price back in. That's on a low volume day, when we're rotational type day, not really in price discovery mode. Very often it'll come back and it'll close at the VWAP or near to the VWAP at the bell. So 3 ideas to look at trading the close. Any edge? Probably worth some investigation. Take care, keep your risk managed. Bye bye.